All right, good afternoon, folks. Scott Henderson, shooter. We are going to go over our town hall meeting kind of review and cover a few things. Of course, at the end of our presentation, please do review our disclosure. Just one more screen check. You guys see my SPY chart? Perfect. All right, so we're going to do it a little different today. I wanted to take a look at the big picture. The ironic thing about technical analysis is normal events within certain standard deviations are very easy to call. It becomes very challenging when you have something beyond a third standard deviation because it tends to skew your count. And that's what COVID did to these charts. Well, I think we just got clarity that our COVID low was really an outlier, and it should have been, in all other circumstances, the corrective leg should have come in around 280. And currently this chart is mapped that. And the reason I say the clarity is because this is clearly peaking drive one. This is clearly peaking drive two. We've now gotten the back test. Very aggressive, very euphoric. So I would expect us to get our third peaking drive. Let me just step down in time because I want to just give a visual of the monthly chart. But overall, that means we measure to the 1,618,910 on this overall structure. And basically, that's the equality from the 2009 low to the base of this first mound, which is 3.2 of 20. So structurally, we have a lot of room to the upside. But what we're also building are these broadening formations. We have this huge over time, which is broadening, and then we have this internal one, which we're in now, which is sort of was created by that back test. So typically what you do is you get a skirt. So this might even accelerate a little bit, but the skirt. So R3, assuming this is drive one, this is drive two in this leg, we should get a drive three around equality. So I'm thinking our minimum upside on this leg is around 746. Then we're trying to go back and back test the base of the broadening formation. So let me just step down on the daily and make sure there wasn't something else I wanted to cover there. Yes, there was, specifically what that was, but we're going to do it. We wanted to bring in, I just want to show the discrepancy between the time frames here. Now notice how toppy the daily is here. I'm going to switch to the weekly. And just in what I'm speaking specifically of is where our retrace measures using a single golden box downside. Very similar on the weekly. We come down to the 4-hour. We have a completely different look. We have a totally bullish look. Right now, the count is suggesting we're going to test the base of this band around 632 to 629, then we're going to take off, which gives us an initial target of 683. The question we always have when we're looking at a chart in a time frame is who's right? Well, I think the shorter time frame is right here, just with the euphoria we're seeing in the pump. So I think we're going to accelerate to the upside. Nvidia tonight might be the flame that lights the torch, kind of, or it could stall it out a little, or the torch could be FOMC in September. Can't tell you which it'll be yet, but that's sort of the low. Let's jump out to the NASDAQ. I'll go and also look at this on a monthly for a second to give you a visual. I basically worked the chart up the same way. Note how we have similar broadening formations that have formed. Now, let me just clarify. I have two different Fibonacci. The Fibonacci 1 measures this trough, this peak, and this trough, right? So it's measuring that entire leg from the base of the mound structure. Then the next Fibonacci level measures our peaking drive 2. Reason is because we only measure the leg that we're in, okay? So we go to the prior leg, measure the trough, the peak, and the trough, and that's what this internal fib is. And that really is the fib that we want to watch or follow because that will be how price tracks as long as this slope hold that we have here. So I see a little shallower number, not as aggressive as the SPY, which is a little challenging, but I see maybe the 1618 here, maybe to about 721. And then I also wanted to step down on this one and show where the fib or how the retracement looks. I mean, so we are real toppy here. I suspect we get back up here and test this bar before we pull back. I don't know that we're going to pull back here. Reason is, even though you could classify this as 1, 2, and the third tag, it may be done here. But I think we get a shallow retrace, maybe back to the 618, and then we bounce again. But we could very well build out of, notice how we built this flat out here before we broke down. Very similar case. So I'm thinking this could go out till November potentially before we get that. And if we look at our other toppy points where we've had, tape does like to build out these little short flats before it rolls over. So it just depends on whether we get a retrace like this retrace like this, a little shallower retrace, I think is sort of the way to look at it. But let's step down to the daily so you can get a visual here. Daily, a little shallower on this one. It's saying this demand shelf is going to hold. All right, let's jump to our list. We have a bunch of names to cover here. All right, let's start off with NEO. Nice breakout, little toppy. I'm looking at this peaking drive 1, peaking drive 2, so this is an impulse for me. And honestly, I chased the FOMO. So, and I'm looking at this as a flat, not wave 1 like Elliott wave absolute is measured. I'm looking at this as 1. So this is our 2. This is our 3 potentially here. It's already sort of flagging. I wouldn't be surprised if it's really shallow. But we could get a little back test here. And then we head back up toward, $7 to $8 in that range. It is my thought as far as the look. Now, one thing I wanted to point out with NEO, and I can't, again, that resistance band is a good spot. But notice how oversold, if we look at NEO. I mean, it just, for a competing, an Asian competing, their sales are really, they've actually opened up their sales centers till 3 a.m. because they have such a high demand, that's promising. NEO is getting really popular with their ads about their battery switch out and everything else. So I like it to the upside here. We get back above this ledge, now it opens up $16. So it opens up a double. And the next test is going to be $20 to the upside. So that's my thought on NEO. Now, uranium, I just want to come out to the monthly. Just look at the monthly here where we are. Give you a visual of how much room this has back to the. We came off of a historic low. Great call. I'm going to pat myself on the back. We picked the bottom. I mean, we really did, or close to it anyways. I think it was here. But note that we were up at $133. Note we've broken out of our first ledge at $40. So I look at this as a flagpole. So this is our A, this is our B, and get a C right up here. Happens to measure with equality as far as what price anchors right now for your confirming trend support would be 19 and 35.64. Let's look at BMR. Now this is purely, and it's really sort of underwater at the moment. I sold 55 and I'm eating a little crow on that at the moment. Really still hasn't done anything wrong. I've got my trend support set at 12.38 and 22.37 because I wanted to give it a little room because I was thinking there was a potential it could come back to the shelf. So I was perfectly willing to absorb that heat as far as my look. So 618 to me is totally viable up here at this 129, getting back up there. Really a heck of a move from where we are. Not only that, and they haven't started paying out the dividends yet, but apparently part of the BMR holdings in Ethereum is their staking. So there's like a 3% yield on top of the valuation of Ethereum that you're going to see on this one. And I really like the idea of that. And there's a couple of other funds that I haven't had time to go into yet are doing the same thing. But with Fundstrat doing a special on this one, ironically, it was the day after I entered. That was pretty good. I like it when I pick it first. So that's sort of my thought on BMNR. Clean spark. It's just a perfect symmetry to where we are as far as our low. Anchor is 645 and 912. As long as that 912 holds, we're going to push back up. I think that target's going to head towards that 618. I think it has, even though it's gotten beaten up and there is quite a little bit of competition in this space, but it's just completely oversold. It's, it's sort of like a MongoDB. It's up 30% today, which, by the way, I have to apologize because I thought of putting a long call on that a number of times and I didn't. Just like I woke up this morning and serve pop. I planned to put on a long call on that and I didn't get to it for whatever reason. But, the cloud support structure is where I think we're going to see some pops. And cloud security is something that's just going to be very relevant. I mean, it's just relevant. So I think Clean Spark is a candidate to totally benefit from that. So I think our first target is going to be that 618. Now that measures this first leg down here. It does not measure this whole mound. Now, if I come in and I measure that whole mound, the whole structure from the base, which is not just because it was so oversold, doesn't mean it's going to be invalidated, but they're legs, they're like shelves that occur in Elliott wave. So you have your motive wave and then your corrective leg, and then you're going to get another motive wave and another corrective leg. So the target on the whole cycle wave is back up at $20.50 from where we are here. So All right. Beyond really has done nothing yet, but it's done nothing wrong. I just liked where it was. It was worth a decent shot to put a piece on for me. Don't really like the name. Don't like what they're selling. I like real beef. But hey, it's a 50% back candidate minimum, 365 from where we are. 618 comes in at 395. Your risk anchors would be right down here on your lows. So at 223 and 235. Sort of a cheap way to keep something long, really, when we're at a floor, which is one of the reasons I had thought about that. Now, JOBY, I think we're putting in a floor here. So let's move our risk anchors down. This is a new entry from our first one. So at this point, we're just going to assume this all. I'm going to give this a little more, just a little more. Give it to about 1395, so 496 and 1395. I still think it measures up here to the 3618 up here because of equality, assuming this is a flag, pole, etc. This whole thing here just looks symmetrical to me heading back up to the upside, up to that level at some point. Might take us some while to get there. But this drone stuff is getting really important. Surveillance, everything else. So, all right, now Onan, O-N-O-N, I want to get a piece on it. I haven't pulled the trigger yet. And a lot of it was because when I was looking at this, after I posted the article, it wasn't green in the morning, and I didn't have the Mag 7 all green. So I was selective. If I was going to put less than $500 a contract on a trade, I set a dollar figure that I was willing to risk because I wanted to increase my longs based on the bounce that we got in the indices on the hype of, a rate cut, because it was a little more euphoric than I was anticipating. So I wanted the long exposure. And based how we opened today and continued to run, it was a good idea. Except for we're just not ready yet for 09. It gets back here to this 44. I'll probably put a piece on. However, I'm going to be light until I'm sure that this shelf holds. The reason is because it's a long way down to $40. So we could flush all the way down here to $31. I mean, it wouldn't be unusual with this kind of volatility that we see here in this tape at the moment. But I still like it for a shot long. That's just my thought on that. So if we get that pullout, I'm looking at off of this fib extension, roughly off of this low. So it puts us back up at about $60 as far as the target to the upside. All right, PFE. I want something back on this one as well. Right now we're in the zone. We have one more fib level down to 2453. So really a potential scale now. Now, you don't see me flip-flop very often, but I definitely flipped on this. And the reason I flipped was because we put in this confirming low here, and then we got a divergent. I don't know why I didn't see it here. And then I saw it once I put this. I wasn't keeping the MSB strategy on my charts, and it's going back because it gives you such a better structural picture of where your supply and demand zones are, and they're based on the prior point of control. So it's structurally a good spot to look at this. And then just below there, we have our on balance volume shows. And then the smart money concept is actually this band. Sorry, I misstated that. All right, so we're going to skip the week of August 18th, unless somebody wants me to go through those. Basically, that was the week we pulled back, didn't open any positions on those. They were intended on short-term positions, so there's no reason to cover those as far as I'm concerned. Now my labels are there. All right, let's look at GCT, GigaCloud. Now, we were stopped out on this one. I'm liking it for a re-entry, maybe right down at this 25, because structurally it's done nothing wrong. Just a lot of, that's the challenging with smaller caps where entities don't have names. There's going to be more volatility. Also, too, I see this as a broadening formation. I'm still here. So, we right there, we come back and tag this. It's going to pop. That'll probably be where I jump on board with something again. All right, 4. I like this. I want a piece on this one too. It's beautiful look. It's just right now, it's not its time. Every stock has its time. It's just not ready yet. I mean, it's close. It really is. Gets up into the gap, then it's giving us more of an indication. I think we're going to get one more back test down to about 85, and then I'll probably jump on board as far as that's concerned. OSCR. Now, this is one of my favorite AI stock because they're just rewriting healthcare as far as AI is concerned. Measures up to this 618 at $24. That's from our trough here our trough peak here and our trough down here. We're already into a resistance band, so I like it to the upside. So in this scenario, I would move my anchor up to 1634. Give it, well, no, actually give it 50% of the prior candle. Give it a little. So about 16 bucks. All right, let's look at Wolf. That's flagging. There's nothing, I drew these these two additional as ledges, so if we look at how that 4-hour chart I did that with, maybe it was the weekly chart. Trying to say, yeah, okay. So I was going off the weekly chart. I was taking the breadth of this general. Right? You have this little consolidation here. I would suspect we get another general and then a third general up here. So potentially could take us back to about 15. Really, my opinion hasn't changed. Use the 92 cents and the 754. It's not changed. It's not broken below the wick of this 858. Breaks below there, we could get this back test to $6 or 580. So I'm going to leave that up to you whether you hold that or not. All right, SBET. Wanted to put something back on, close to when I was doing my risk management, I started taking some of this off, but I think we've put in our floor here. I don't think we get back below this 1810. And, structurally, it's not the perfect scenario. I mean, this could become an impulse, which is pretty close, but it should end somewhere probably by the end of next month. It's not already, but I still like it for a push to the upside. It's one of those tech names that really is developing a base. Ironically, it's been all over the radar as well. So, I would just give it a little room if you're in it or you're still holding. I've still got my cash secured puts. I don't plan on moving them anywhere. All right, let's look at Marvel. I want to add something back to this. I'd pull my anchor down here a little bit because we sold half of it, but I haven't done it. I picked the new names that had better setup. When I started adding stuff, higher risk reward, smaller risk on the table. Whenever I regroup after a sell-off, that's sort of my ideology. I like this one to about 93 bucks. ATKR, nice base, has room up to at least 100 fib on that internal flag here. Once we lost the first ledge, often a name that doesn't do it right, just wasn't its time, wants to come in and take something out. However, in this case, if I was going to enter this at this point, I don't plan on entering. This is not as clean as some other counts, but from a breakout standpoint, we're going to get back up and test this high. So it's going to get back to at least 65, 70 bucks is my thinking. So the anchor would be 49.92 and 55.97. And it's probably not a bad cash secured put to sell either. Now, BTU, this has a lot to do with the utility demand that is my thinking off of AI. And because we're going to continue to see power usage increase or costs increase, and who is that going to benefit the most? The midstream companies, the ones that own the pipeline, natural gas, etc. And where is Peabody? I just like the chart, the way it looked. Peaking drive 1 for me. This is grouping 2, so we're going to get a 3, so maybe up to 22 bucks. Sort of a safe place, I think, to park with where oil is. That's my thought. Obviously, it breaks below our 1590. I potentially change my mind, but that's my thought. Now we were pumping Lily. And of course, it started to move. So I would I'm just going to run a tight anchor on this. Give it a little more room, only because of where it is in the grand scheme of things. Beautiful upside. So, all right, so roughly 623.78, 693.78. And my point is that the share price and, the 618 is totally viable here at 1,033 bucks. Elliott Wave Absolute measures it at $1,133. Just, it's a beautiful look. It really is, especially for a moat like Lilly. And this whole sell-off, I think this whole candle was Trump cutting the price of prescriptions by 1,500%. All right, let's look at AMD. Now, I think this gets a huge bid off of Nvidia today. This count puts this all the way up to the 1618. I had a piece on it month before last. Should have never sold it, but that's sort of my take on what I think this is. So we've already hit, this was my target, and it took out my target. I got stopped, but that was my original target, the 182. That was from down here at 116. So this is one I want to get a piece on, and if I'm able to lower the risk I have on the table so I can absorb that position, then I will add it on any pullback to about 158. Hood holding up really well. I wanted to show the fib retracements on this. I've good to cancel orders at 73 on Hood. I think they're going to be a major benefactor from the altcoin boom that we seem to be going. Not going to address that specifically today, but this is peaking drive 1. This will be peaking drive 2. So once we get this back test, I get real excited. So I have no problem with good to cancel orders. All right, Galaxy, I think our low is in at this 2287. I think our target still heads towards the 618 around 3950. I don't think anything's changed. I'd give it a little more room. I was in cash secured puts on this one, so stop scheme works a little differently. I mean, usually I'm not going to take out the cash secured puts. I'll buy some puts directly to insulate, but it's really got to take me out. And right now I'm in 25s on this, so I'm still fine, right at the money. So I'm good with that. Actually, it's doing something similar to I thought what it would do. All right, Soundhound. I'm a little upside down on this one because I sold 15s. But at the same time, I think we bounce somewhere right around here. So I think it comes back and tests this trend support, and we continue higher. So it took out my first target, that's 618. Now we're digesting this. And this, again, is peaking drive 1, peaking drive 2. So this is the back test. We're going to get the third peaking drive up around 20 bucks. So that's my thought. That was the game plan. Nothing's really changed there. All right, Grab. Similarly, I sold the $5 covered calls. All right, so we're looking for this 618. I think it's totally viable. It too. So about 750 plus was our target here. So it's got a lot of upside. It's doing well in the delivery space. I don't want to say it's as popular as Hims in the big city, but it's pretty popular. So, that's the main reason I like that. Not only this, we have this digestion zone, sort of safe bet, get some income on it right at $5, can sit on it for a little while kind of thing. ONDS. Now this thing I expected a breakout, but it broke out a heck of a lot deeper. And I can't figure out a way. I'm not going to sell them. I'll just let them, get taken from me, my shares, with the covered calls. But I don't want to add calls, and I didn't want to sell more cash secured puts unless we get a pullback to about 360. So we get a pullback to 360, and then I'll figure out something that I want to do. But I couldn't really figure anything out. Nothing made sense on the options. So, if you bought common shares or you have calls, I'd use 57 and 392 as far as your risk come. All right, let's look at IBIT. There's a potential we come back to 60 bucks here. We've broken this ledge up here at 63.91. However, I've not trimmed any of my positions. Reason is I think this holds. So we're just going to ride it out. Structurally, I'm looking at this as peaking drive 1. This whole structure here is peaking drive 2. Well, actually, it could be the A. This could be A, B, and then C, and peaking drive 2 comes in up here. Could be that too. But especially looking at the smart money, that's going to get a huge bounce at 61 if we get down there. And the ironic thing is that Ethereum is continuing to build, just solid. XRP is pinned right at $3. Link is pinned as well. So something's going on in the crypto space. Either they're pulling from Bitcoin to buy the alts, which is very viable actually, because the alts are just growing at such leaps and bounds. I could see why people would be liquidating and moving it into an asset that's moving 3 times as much. I can understand that. I just don't want to put on that kind of risk in the altcoins like that. All right, let's look at Big Sky. I think it's time. I like it here. 50% back. Let me get correct fib up here. I went through and I did all of these charts. I don't know what the heck happened. Must have been because I shut down. I shut down instead of stayed on. Maybe next time I do the charts the night before Wednesday, I won't shut down and see if it saves. I know I worked this chart. All right, Big Sky. I think we're heading up towards 29 bucks from here. So let's just get a position on. That's my opinion. I'm wrong if it breaks below this current. So it breaks below this. That's where I'd put or plan to scale. So the anchor would be this 615 and this 1536. And that's my opinion, and I'm sticking to it. Okay, I like UPST here as well. Only thing I don't like is this thingamajigger here. And I like UPST just because of the structure. You have a broadening formation here. So you got like this. So that would mean that we're going back up here. So we go back up to 100 bucks easy. If you're going to take a shot at it, just know exactly where you're risking. I probably wouldn't even risk 65 bucks, 50% of the general right here, roughly 65.80. But I like the look. It's, I want to get a position on there. Just right now, my book isn't balanced enough to add anything. So until some positions roll off, I'm going to be a little limited on what I add, just because I set a dollar figure of what risk I want to put back on the table here, going into what I perceive this FOMC thing. And then I really don't plan on adding a lot, except for small pieces, until after FOMC. So that's just how I've structured my book. Of course, I don't know what your book looks like, so I can't make that call for you, kind of thing. Now here we have, almost a trend channel. Looks flaggy to me. Looks like a flag at a pole. It's the first thing I see here. So maybe something like this back up to about 236, a beeve. I'd rather it be down here at 188, but it probably is worth selling some cash secured puts around 198. I don't know that I would sell above that, only just the piece, okay? All right, let's go through some of the requested names. GE Aerospace. I think we pulled back. We at least test this supply zone. It's done nothing wrong. Stop. I'm going to just, only because I don't want to chart too much on the 4 hour. Let me go. So I think our target's up around 296. So you could come in and just use these anchors. I'm just tightening it up, so I'm just being quick here. Breaks below that 263.80. If you're holding this, I'd be trimming, taking some profits, or selling some covered calls. You got a lot of resistance right up here at this 287. So I would expect this to play out because it's structurally is accurate. On top of that, you have this like broadening formation here as well. I think you'll get this broadening formation. So I think we get this back test structurally. It just looks right it could even come back down deeper. It could come down like this. But structurally, that's what I think we have there. GEV, same scenario. We're testing. It could just be a broader flag here. Shelf held at 580. I'd at least be selling some covered calls here, depending on where you own it from. But I think 533 is viable here. Looking at this just as an ABC down. It's already hit our upper target. That's just my thought. Covered calls are a safe way to take a piece off or some risk off. I'd go right at the money. I would sell 625s, right? I'd sell short duration, maybe September. That way, if you flush, you still get to keep it and you get the peak premium. If you want to roll out till October, you could do that as well, but that's my thought here. STRL. Now we're going to start this next leg from where we are here. So this whole piece right here is what I view as mound one. I'd raise and push our anchors up. Obviously, if you're still in it, 96.34 and 263.45. I say that 10 times. It's a tongue twister. I think we're going to end up at least up here at this 50 fib here, and the most likely spot is going to be up here at 1618 at 539. So it has a lot of upside as far as I'm concerned. POWL. Get this back test. I drew this consolidation band, I don't know, last week or the week before when I looked at this. Get a back test to about 242. I've got some alerts set down there. Get interested in picking that up. All right, UUU. Now I'm going to go back to the same thing that I did on URA, because right now, uranium is running. We almost have like panic buy. And I think the reason we're seeing that is because everybody realizes how much of a power demand that AI is going to cause the market. So we need the cheapest potential fuel. Now, I don't know that we get back up to $30. We've got resistance we have to get through at 18. We are wicking off here. So we do have some buyer exhaustion right here off of this high at 1334. So we might get a little bit of a pullback, but structurally, I'd look at this. I think our minimum, just measuring our first wave, throwing in a quick fib up here on this. So we're going to go up to about 1899. Then maybe we reject, get a back test, and then we'll put in our third peaking drive. So I'm looking at this as peaking drive 1. This will be peaking drive 2, and then we get a third peaking drive. Should be just as volatile as this retrace down, because realize this is the results of a commodity that was deprived, and now it's expanding like crazy, not just in the US, but across the world. So I think it continues to go. So just mind your position size. Don't be afraid to sell covered calls right at the money or a little bit outside the money, to sort of lock in some prices. We get any kind of red candles, it breaks below this 1057. I would try and capture as much as I can from that. We are diverging just a little bit on that high. So structurally, this was our confirming high right back here. Then we got a divergent high, and now we have a second divergent high. So we're going to get a third one in this structure. So it's going to go to a minimum of $15, I would think. CTRE, or excuse me, arrow. No, didn't click it right. CTRE. Care Trust RIT Moonshot. Look at that shot up there. Just measuring this. Boom. Beautiful looking chart. Beautiful trend. It's done nothing wrong. Squeezing. Ascending wedge. It's the only problem with it. Ascending wedge is going to roll over. That's the only problem with it. It's got a ways to go out there, though. Well, maybe it's more of a channel than an ascending wedge now. Yeah, more of a channel. Still sloping a little bit, but it gets back above these highs, it's going to push that 618 $40. So, if you're in it, hold it. Beautiful volume candle coming into this. You got no reason to move out. I would not probably sell covered calls on this one unless it breaks below the shelf at 33.95. AIRO, that's little digestion here. We do have a nice demand shelf down here. What I don't like is that we have some divergence here. So this is coming in as a high. Challenging part is how much lower that could go. Assuming this is our 1, this is our 2, this is our 3, this would be our 4. And then we get a 5, maybe symmetrical down here. So maybe $18. And there's not a lot of downside risk as far as the size. So, it really depends on how much risk you want to take. But I would think about selling some covered calls up here, maybe around 25. I'd do short duration, September or October. See where you land with that. NFE, just flat down here. Really, we're sort of diverging right here. So it implies that it could roll back over. It still needs more time. I'm going to come in and just say it's probably an XABC or ABCDE kind of thing. So it'll be something like this. So, we could be here all the way out until, the end of November. October before we pull out of this on the 4-hour. It's just my 2 cents. Dow, beautiful push off of that low. Needs to get up and fill this gap. Doesn't get bullish until we get above this 32.37. But it's a good spot to sell some covered calls, I would think. Let me come out to the weekly. It's overshooting. It's inverted on the corrective leg, but it's extended too, which makes it challenging to call this. What I mean by inverted, so our corrective leg did this, and then on the other side, we went in the opposite direction. And then we got an extension. So we got my S look, which basically means we have flushing drives, right? And we have peaking drives on the reverse side. So this technically should have been our bottom, but it overshot and continued. So chances are this was an impulse down, much broader, something like this. Wherever this high comes, it wicked off here. Probably right there. So it probably comes back in here. We have flushing drive 1, 2. So a third potentially could come in. It should be pretty quick though. So we should, it could stay out there till December before it heads back up to the upside. CTRA. Now I just don't think this is done to the downside. I like it at 22. Said that last week. It looks better than it did last week. We had this, or 3 weeks ago. We just digested, but it's flaggy looked. So, I'd like it down here where this demand shelf is. That is a safer shot at our B back to 27. But I still would look at this as an ABC corrective leg, and it's not going to settle until it gets back around 1850 is my thought. NVO, I'd like to get a piece back on this, but I still like it back down here about this $36. Even with the look here, just structurally, it looks like that ABC to me. So basically, you get 333, ABC, ABC, and then you get an ABC down here. That's the structure. Pretty solid look to me. Now, if we look at that, this is an impulse leg down. So we had drive 1 or flushing drive 1, 2. This is 3. So then we'll get something similar on the opposite side of that, or should. It could be done. It could be. And it's very challenging to chase the catalyst to the downside. So we should get something like this. We should get more peaking drive, or one more peaking drive like this. You had these flushing drives here on the way down, and we actually had 1, 2, 3, 4, right? We could even count this as 5. Now, Elliott Wave likes 3 5s and 8s, so I don't think we get 8 here. That's like a 5%, 3 to 5% outlier event. I don't think we get that here. That's just my take. All right. VSAT. Boy, just like a rocket ship. And I can't tell you why I don't have a piece on it. Can't. I saw it. I think I saw it down here. At least that's my memory. Or maybe somebody brought it to me. I don't know. Actually, I don't recall them. So you would move your anchors up. I would go to the wick here. You've got your second general. When you get your next general, move it up to the wick of that next general. Gets up there. Next candle, move it up to 50% of that general candle. That's how I would manage this here. So currently 669 and 25.50. Has a potential back up to 77.36. Beautiful upside. Nice chart. pretty thick. All right, let's look at CRML. Nice pumper too. Nice look. Except we should get a back test to about $5 first. A lot of resistance we're hitting here. 4 hour on this one. Short tapes are always very challenging. See, that nice push up broke down. Kind of an A, B. If we get back above this 985, it actually could test the highs back around $22. Good. Structurally, it looks good. I'm looking at this. This is the flat. So this is our peaking drive 1, 2, 3, and this. So this is a mound, right? 1. This is probably 2. So we probably get a third peaking drive up here, I'd say, right? So this becomes mound 2. Then we get a mound 3. So I'd say it's very viable getting back up to $14 from here. 25% heat to the downside if we do get a pullback here. It's a little challenging. We're wicking off. Looking where our wick. We like to sell on the wicks. That's one thing I see. Every tape has its MO. I'm not sure exactly what metals they're into, but I like commodities here. I think with what China is going to have to do to prop up its economy. I mean, they're actually doing really, and besides the failure in the real estate market, they're doing really well. So any commodity-based metals, especially with what's going on with AI and the infrastructure, I think it's a no-brainer. I don't see how we can miss on that. That's sort of my thought. I think we have a lot of upside there. I just haven't rotated yet because the indices still are working to some degree. And the only time I rotate to commodities is when that thesis sort of breaks down and we can't pull yield out of equities. Then I shift back and start looking at commodities. But like for example, cattle right now is a great buy. And we're hearing it across the board. If you look what's going on, I mean, we had 15 to 20% pop in the cost of beef at the grocery store. And the reason is they were culling all the heifers who didn't have calves last year. They're doing it again because of the heat wave. So basically what they're doing is they're cutting down the herd size because they can't afford to carry the cows. So those cows are going to slaughter. So basically the pool of cows for fresh beef is just constantly reducing. We have another 1 or 2 seasons like this. Literally, we will have a shortage of red meat here in the United States. That's how severe the problem. I mean, I don't know the actual number of cows in Texas, but it's big enough where it's been on my radar. And then let's look at LEU. Looks to me like an ABC down, maybe a little push up to 225. I'd clearly at least be selling covered calls up there. So I'm looking at this. This is our A, B, C equalities down here. Anchor until it's broke. You could push this up a little bit, which is probably a good idea here. Push it up to the wick of this candle at 192.16, what I would do as far as that looks. So, well, I think we've covered everything on the list, folks. Any questions? I'm going to give it once, twice, 3 times. All right, folks. Great trading. Until next time.